I would like to briefly talk about Zoomlion, which we think is a bit of a microcosm of a lot of interesting and noteworthy overall trends around the Chinese equity market. Um, Before we go into that, the usual disclaimers apply, um, which essentially says do your own research. And of course, Slam may or may not be taking positions in securities discussed. Um, Briefly about us, we are a roughly 1 billion AUM value investor into Asian equities. We have research colleagues across Asia, and we hold over 800 meetings with Asian companies a year, and that's really the heartbeat of how we invest, meeting companies, and that's how we generate our ideas as well. Our main approach to investing is in some ways, old and traditional style of value investing. We focus a lot on margin of safety, um, and we focus a lot on alignment of interest, which in Asia is particularly important because most Asian companies are controlled by someone else. So we focus on value, dividend, low valuation companies, and we focus on companies where we think we see alignment between what we want and what the owners or the management wants in the company. And for that reason, we focus within value a lot on dividends because we believe dividends are a great signifier of that alignment. And we sometimes are able to help management and owners to be even more aligned with minorities through what we call constructive engagement. You'll see as we dive into the case just in a moment, the way we approach investing is to say a lot of investors may say, well, we just buy the best companies and hold them forever. I would admit we don't do that. We buy very good companies, very excellent prices, and buy them when they're very dislocated. And over time, we'll find a moment to sell them again with discipline at the right moment. But our strategy is very much out there to find value that's dislocated, understanding why it's dislocated, and then acting. And we'll go into that with an idea that we're currently into. Before that, just a brief moment of accountability. My previous time on MOI Global, we spoke about Kina Bank in Papua New Guinea. I just want to share that how that has gone since. And my previous time on Global, we shared about JB Financial in Korea, uh, uh, and would also like to share how that has gone since. Um, Today, we are looking at Zoomlion. Zoomlion has a lot of dirty words in it when you first hear about it. It's a Chinese construction company that's state-owned. Um, but please stay tuned. There are a lot of interesting things going on here. The company is Hunan-based. It is a very uh, uh, broad manufacturer of machinery, which feed into the construction, agriculture, um, mining, and other sectors. Um, it started as a very domestic business, but has since expanded overseas, and we'll get into this a little. It trades at a very undemanding valuation of less than 9 times price to earnings, has an over % dividend yield, and is sufficiently liquid to take a meaningful position, and has about an $8 billion market cap. Our headline thesis, and we'll unpack all of this in a moment, is that the fact that it's a China construction exposed company is in the price. The earnings are actually buffered through very profitable overseas expansion. And by buying at this high margin of safety, we retain optionality to a lot of good things that can happen, in particularly around benefiting further from SOE reform, the undervaluation of Hong Kong H versus China A shares. And in the meantime, we are getting paid while we wait through an attractive dividend and a buyback program, actually. So it has a lot of ingredients of things that we like. But it also has a few ingredients that are, in our mind, a real microcosm of what are some of our big three variant views on China, which I thought is useful to share with the MOI Global community, of which we've been a member over many years. The first is SOEs. We believe Chinese SOEs are misunderstood. We believe SOEs are actually turning from being sort of value destroyers that people are into, in our view, some of the most undervalued and maybe best places to allocate capital to within Asian equities. And they're turning from being maybe rightly valued negatively to being dramatically undervalued for what they represent, in particular because they adopt a lot of capitalist elements, such as share option schemes, share buybacks, and generally a focus on the shareholder of late. The other uh, view that we hold is that investors should pay attention to Hong Kong. Hong Kong offers a lot of value relative to the China mainland market, and it used to be sort of the generally accepted wisdom, well, Beijing only cares about the Asia market, and that's where you should play. And people also were always very interested in the Asia market because it was shiny and new, but the H share market is actually trading a structural discount to A. A lot of companies have shares outstanding in both. This also applies to Zoomlion, and the H shares trade at a big discount to the A. But also policy is diverging now, and policy is actually supportive of the H-share market, so much so that a lot of mainland buying is starting to play a real role in the H-share market, and we're running at way over 20% of Hong Kong volume is actually driven by mainland buyers today, from very low, minuscule single-digit percentages just a few years ago. And the third is we actually think China is reasonably well prepared for the tariff war because it has diversified its export base over the last few years, particularly to countries that are friendly to China. And Zoomlion is one of those companies that had almost no foreign business and some foreign business selling to lots of places that are somewhat politically friendly to China. China today is in a place where it's selling to other countries of the global south and has relationships, for example, the Belt and Road Initiative. I think something like 150 or 2/3 to 3/4 of all countries in the world have somehow declared their friendship with China through this vehicle. So China has been busy diplomatically to diversify where it accesses foreign demand to supplement its arguably weaker domestic economy over the last few years. And these days, these statistics are a bit better known over the last 14 days, but it's been in our letters for some time. China's export exposure to the US is actually not that high. It's less than 3% of China GDP, and the US is now actually less than 15% of total exports out of China. And what's going on in Zoomlion is really an explanation for some of this. But starting with the variant view on SOEs first, SOEs are no longer what most people think. SOEs are actually rapidly adopting. There are over 100 central SOE companies that are rapidly adopting share option schemes. So management gets somehow paid in equity. Um, that's the famous Charlie Munger, show me the incentive and I show you the outcome. Several of SOEs are also introduced